Hi, and welcome to another edition of the NAIC Insight Series. I'm your host, Bob Greene, and I am delighted to be joined today by Mina Pacheco Nazemi, Head of Diversified Alternative Equity for Barings. Welcome, Mina.
Thank you, Bob. Thanks for having me. I'm very excited to be here.
Oh, I'm super excited to have you. Mina, this is an amazing opportunity to connect with someone I've known for a long time. I think I first met you when you were at Harvard Business School and you were doing your capstone project. And I have to be honest with you, I'm not a fortune teller or someone that can see the future, but I knew from very early on when I met you that you were just going to be outstanding. And I'm just proud to have you here today, and I'm really proud of all you've accomplished.
Yeah, and to make us feel older, that was 20 years ago, Bob. So that was a long time ago.
Well, we'll have a good opportunity today to catch up. So,
Yeah.
Mina, tell us a little bit about who you are and what you do today.
I serve as the head of Barings Diversified Alternative Equity, which is a mouthful. We manage capital on behalf of our parent MassMutual and third parties in both private equity and in real assets, focused on the lower end of the market. When I joined, we had less than $3 billion under management. Today, we have about $5.5 billion. And we invest on behalf of institutional investors. And then I also serve as the president. We do have also a product called Pine Point, or it's a liquid alts product as well, which the intention there is to democratize private equity for the average investor as well, and not just for those who are qualified purchasers. So everything we're doing is, as I said, lower end of the market in both private equity and also in real assets, which includes renewables and the digital infrastructure and the circular economy.
That's outstanding. Mina, you get a firsthand view of what's going on in the marketplace. While we are in perhaps tumultuous times, tell us a little bit about what you're seeing that you like in the marketplace these days.
So I'm still a believer in the small end of the market, smaller managers, emerging managers, just everything on the lower end. And frankly, it is actually in this environment where those smaller managers who are nimble, who are sector specialists, are the ones that outperform. They've been investing in their strategy for a long time. They're not learning about a business just because it came across their desk through an auction process. Typically, they know their industry cold, they know the competitors in the market, and they're able to create value. So still a believer in the smaller end of the market. Those are also deals that are typically capitalized with less debt. And, in this interest rate environment as well, you want to make sure, obviously, if you're able to buy at an attractive price with lower leverage, it just gives you a better opportunity to handle if there's more challenging times, and challenging issues from a macro environment. So those are really, again, squarely lower middle market. We have the same philosophy on the real asset side as I kind of previewed there, where we're doing deals with smaller managers, smaller operators, and we're basically buying small and, as I described, build a core, and we're selling to the bigger platforms. So those are just kind of at a strategy level. We're still super excited about not only the direct investing that we do a lot of work with smaller independent sponsors. And then we've been also incredibly active on the continuation front, which is the continuation vehicle front, which is really a combo of a co-investment and a secondary as well. So lots to do in this environment, despite all the challenges that you see. That we believe that this is in these challenging economic times is sometimes when you make your best investments and the best opportunities and best returns.
No, that's for sure. You alluded to the 20 years. I wasn't going to put a number on it, but you're right, it has been 20 years. And you have had some enormous experiences over that time period, both professionally as well as personally. I know that you're a mom now. You clearly are running a group attached to a much larger enterprise. Talk to us a little bit, if you will, about some of the key experiences that have shaped your career.
Look, I've had the great fortune of and luxury and privilege at studying at some of the best universities. To kind of bring up is, as you asked that question, is really what has been more of my formative years. And I think just growing up, right? Growing up, and some people may know this about me, but I grew up in LA. My mom was OBGYN, and as you know, babies come at all times. So I spent a lot of time with her, even on weekends, showing up at hospitals. But one of the things that I learned from her, and is just carries on in terms of who I am as an individual, is really I saw how much she fought and made sure that her patients got the best care, right? And she put herself on the line, advocated for her patients. Many of them were, people of color, Latinos, African Americans, farm workers. We had a lot of oil, onion fields, and where I grew up, and in the citrus. And she made sure that those patients got the best service. And I would see her having to sometimes fight with the nurses or the hospitals. And that stuck really with me in terms of who I am. And many of you know I advocate a lot for women and people of color. But really, I knew I could never be a doctor, but I really, she was really a fiduciary. She was a fiduciary for her patients, like I am with my clients. And so that was really formative for me in terms of I put myself aside to do the best for my clients. And that's why they continue to follow me after all these years, because I know I'm making investments and decisions in their best interest and not mine.
Mina, when you talk about your mother, there's obviously a gleam in your eye, and the impact that she had on you is immeasurable. But one of the things I know that you talk a lot about is hard work, and I know that you learned that ethic from your mother and others in your family. But it really is a signature of your career. Can you talk about hard work and the competitive advantage that your work ethic has really been for you?
Like being a woman of color in this industry, we unfortunately don't have another option but to work hard and outshine our peers. So it is so fundamental in terms of how I operate, how I've been in school when I was doing the capstone. And it's unfortunately, it's a reality of life. And it's one of those things, especially when I always talk to young people, especially in environments like these, you need to just outperform, right? You need to do more deals. You need to have stronger returns. You need to connect in different ways with your management teams. You need to create more value. So absolutely, it's hard work. It's, and it's cliche, right? Everybody says that. But I think that, especially in an industry that is maybe, less welcoming of women or people of color, you have to outshine. And it's only when you do that, you're able to continue to move up the proverbial ladder in this industry.
So when I look at your career and your background, you wouldn't say this because you're far too humble, but as a friend, I would assess it to be straight out of central casting. You have been involved in the important programs. You were an SEO. You were a Twigo fellow. You have been involved with many of the most prominent organizations, even started a few. New America Alliance, PE Win, NAIC, others. I can't even name them all. But you have been a champion and you've been an advocate. Where does that come from, right? I just want to get a sense. I know elements of your background, but I want the audience to know that the fruit that these organizations produces really helps flourish the whole industry and benefit the whole industry. So where does your connectedness and advocacy element come from?
Look, I believe we as professionals in this industry have a responsibility to others. So I would say that's so foundational. The where it comes from was, even going back to even as an undergrad, understanding and valuing that we as communities and communities of color, the only way for us to continue to progress, yes, there's educational attainment, there's legal, there's political, but what's economic?
Mm-hmm.
And unless we have that economic power as communities, until we have that economic, we're going to all move up, right? And these communities are going to flourish. So I always say it takes a village. It takes a village to raise children. My kids are now 12 and 14, right? It takes a village to raise them, but it also takes a village to create professionals who can advocate, because as much as SEO and Twigo and NAIC and NAA and all of these organizations have helped develop me as a professional over these years, I've also taken it as part of my responsibility to help that network grow as well. And so it's that commitment. It's kind of like that commitment I have in mentoring and getting more women and people of color in this industry. It's a very, very similar thing. So it's just super foundational in terms of how I operate. And I think the necessity that I see for us as communities of color to really continue to build wealth and create change.
So one of the fun things I get to do on this platform is help the audience know what they don't know about industry luminaries and others. And in our prep session, you said something that really struck me about your education, which is it wasn't just the classic finance education. In fact, you even alluded to it. You studied under a professor or several professors that had actual Marxist views. I don't want to steal the thunder. So tell the story, Mina, and talk to us a little bit about how that impacted you.
Yeah. So I went to Stanford as an undergrad, which you can argue is a more liberal school, right? There may be some on the East Coast.
Yep.
And I was in economics and also a political science. I double majored there. And I spent a lot of time with a professor, Professor Manley, who was the Marxist on campus. And people just, as a private equity person, they don't equate, someone being a private equity person and having studied Marxism and understanding and really what he really, it was really foundational for me because as I started to talk about, I grew up seeing my mom serve her community. I saw within Marxism and a lot of the things that he taught was just the dignity of work, right? The dignity of work, regardless of who you are. And actually, most people don't know this, but in the 90s at Stanford, a lot of the service workers and the janitors were not unionized, and it was a lot of the students who unionized. And we actually also had a farm on campus, and Professor Manley was the one that helped get those workers unionized. So in my view, there's a lot of, companies will not exist if you don't have employees who want to show up, are happy being there, having, the amount of equal pay, a benefits, et cetera. And so to me, that was also, even though there was in the late 90s, no ESG, right? But that's the S in the ESG, which is you have to have companies who obviously are operating, generating a financial return for their shareholders. But even during COVID, we realized that those businesses who didn't treat their employees well lost their employees. And so, so even though it's not a typical, yes, I did the economics, I did have that as a, as part of my educational upbringing, having that kind of teaching and also mentorship from someone like him.
So now I want to get into the part of the conversation. As I thought about interviewing you, the elements of the conversation I really wanted to have, and I'll let you start, but I want to start with your observations, right? So you have grown up in this industry. You're truly a central part of it. You're fairly widely known by many of us, particularly anybody that's raising capital. But talk to me a little bit about what's top of mind for you. What are the things you're observing in the marketplace today? And let's go through some of them to really sort of color the conversation. So pick out one, Mina. What's the first
Yeah.
thing you're observing in the marketplace?
Well, one of the things in our prep session I shared with you is I've seen multiple cycles, right? We're going through SVB and the fallout of SVB right now. Have gone through the financial crisis, and then when I started my career, there was the internet bubble had burst, right? And so thematically, in all three of those situations, there was exuberance, there was risk taking, and there was you had actors who felt like they could defy the basic principles of math and business. And so it was not a surprise to see what occurred with SVB. And I think there's going to continue to be kind of continued fallout. And it goes back to just my fundamental view that in this industry, you have to remember you're managing money, and it's not your money.
Mhm.
It's your client's money, and you got to be balanced and not take excessive risk. And I will say in all of those three situations, you had people who were risk takers. And so you can't, and some people may argue, well, were the regulators, have the regulators been there? Yeah, that there's a backstop of that, but you have to have good actors operating in the best interests of whoever their stakeholders are. So that would be one of my observations. And I think in an industry that's all about money making, you're going to always have that. But overall, it's having more leaders who kind of think like us, who know how hard it is to raise money and who don't want to squander that, right? And don't want to lose that shot that they got. And so until we kind of open it up and have more people who appreciate that, you're going to always have those kind of bad actors. So that's one big observation.
So
Yeah,
let's tease that one out a little bit.
sure.
So when you talk about the element of taking on risk, and risk can come in many different forms, but some, and I know this from my days as a trustee, some would argue that the work around DEI is all, frankly, is all a little bit too risky and maybe beyond the scope of fiduciary responsibility. What's your reaction to that? And if they're wrong, how should they really think about that?
I have lots of comments on that, as you can probably appreciate. So, number one, when you open up the opportunity set and not just look at it with a subgroup, right? When you're looking at a broader aperture and broader talent, you're just going to see more opportunities, right? Just as a general matter. If you are just closed-minded and blinders on, you're going to get a subset, and you're going to get there's a higher likelihood of you to underperform. So I would just say that number one.
Yep.
Number two, I would argue that related to number one, if you are ignoring a certain segment of the market, you are failing your fiduciary duty, right? Because again, you're looking from a subset standpoint. Number three, there have been countless reports and data and NAIC, the NAIC Foundation, that demonstrate that women and diverse managers do outperform. In fact, we're going to actually publish something, a report on our end. And is it just a key data point for folks? For example, women funds, 70% of women funds are above the median, meaning first and second quartile, right? And so, and only 14% of women funds are in that fourth quartile. So that just is like, if people are, ignoring the data, we have a much bigger problem. But I think there's that. But if you at the root of all of this, why the women and emerging and diverse managers are outperforming, it comes down to women and people of color. I mean, for you to get to that point where you're raising a fund and you get to the, to be a partner or investment committee member, or you don't just fail up, right? So you are talking about people who have really outperformed. They're really putting a lot on the line. Oftentimes they're starting firms, mortgaging their homes, sacrificing a steady paycheck. They're sacrificing maybe even some of the carry to really bet on themselves. So the alignment is usually much higher than a normal 2 and 20 fund where managers are just really generating more of their income on fees than necessarily carry, right? So we're talking about individuals who are betting on themselves, been doing this for a long time, and putting their money where their mouth is. And so you add all of that, plus the fact that they're women and people of color who've had to overcome a lot to get to that point. It's not a surprise that those managers outperform the broader market. So you got to have your head in the sand if you don't see that. And again, it's your fiduciary duty to be looking at all the opportunities and not just investing in that small subset.
So we'll leave that as a tease for now, because Bob and Mina could dominate the whole interview.
Yeah, I'm just talking about that.
And we don't even have wine this time to do that. So let me be disciplined and go back to your next observation. What else do you observe in the marketplace that you want to draw attention to?
Look, there's a lot of challenges in the market for most limited partners. And most limited partners right now are, and I'm talking obviously in the context of private markets or private equity real assets, are really challenged by the denominator effect right now. They're challenged by their portfolio may have too many names, too many GPs in their portfolio. So they're kind of managing that. They're probably managing more names than they ever had with probably less staff. They've been dealing with the re-up trap where all these managers keep on coming back. And they're challenged by not having the resources to look at all the new investments. And let's be honest, you don't get fired for buying IBM, right? But you should get fired if you didn't invest in Google, right? And so it's that, I would say, is a really a big strain with the average limited partners right now. And right now, we're, even though we're in April, we're starting just to get the fourth quarter numbers, official fourth quarter numbers. So, our views is that they're going to be relatively flat versus third quarter, but it's just going to put additional strain on that denominator effect, which means limited and, less opportunities for those newer managers who are looking to get some of those allocations.
For people like you and I that are I won't say advocates first, because I don't want to describe you for yourself, but I'm certainly an advocate first. And I know you're an advocate. We want this change, but the realities for LPs is that they've got a lot of bets on the table already, right? They've got a lot of anchors and lashes that hold them to the things that they want. What's the right answer, Mina? How do they blend managing through their existing day-to-day with even the ones who aspire to change, right? Or get better or do things better? What's the mix? What's the rhythm? What's the step? How do you change when you've got so many important bets already in place?
It comes from the top, and it comes from the board level, the CIO level. It's those elected officials who sit on those boards where they need to send the message that status quo is not enough.
Yeah.
And especially in this market environment, we have, inflation is going to be higher for longer than people expected, where rates are at, China, Russia. I mean, there's just so much going on that the way that people have done business for the last 10 years, 15, 20 years, that's just not gonna work. So it absolutely needs to come from the top, which is just rethinking the portfolio, not coming in with assumptions, re-underwriting everybody. Just because someone made money for you for the last 5 or 10 years doesn't mean that the alignment is the same as 10 years ago when you first hired them. It doesn't mean that the same people are still there who created that value for you. It doesn't mean that that market opportunity is the same as 10 years ago. So I would say that would be my number one thing is just you can't assume anything. And there has to be that openness and that openness to change. Because if there's no openness to change, we're going to be stuck right back at where we were. And you may actually get inferior results, not the same results, but inferior results.
So, Mina, I actually want to, for the first time in one of these forums, I want to actually yield a confession.
Okay.
And the confession is it's really easy to live within your sphere and push on the things that you see in your heart as being important. And, look, I've spent 20 years advocating for diverse managers. And you personally have challenged me, and I hope I've grown through it, but you've challenged me to bring, as the kids today say, bring that same energy for women. So I want to acknowledge that here. I want to tell you that, frankly, it's never comfortable to be challenged. And I guess you can ask every CIO that I've challenged how they felt when I came after them. But I appreciate what you have taught me and the epiphanies associated with it. Talk a little bit about the role that more advocates for diversity should really have in considering the impact that women feel in the same industry.
I think that our advocacy for diversity will only be multiplied with advocacy around women. Mm-hmm. Because women represent 51% of the population, and women are far from getting 51% of allocation. So let's just start with that, right? And you have a lot of women and white women who want to see the investments of their portfolios to reflect who they are, right? Think about all the teachers' funds out across the whole country, right? A lot of them are women. So one of the things that I do that the market does not do is that even in terms of serving their managers or serving their companies, they lump women out as one category.
Yep.
White women versus Black women versus Latinas versus Asian versus Native American. We all have a very different experience. And it's when it's that grouping of all of that women into one category that almost minimizes and diminish, like it doesn't really outline the differences like you would do in the Black male versus a white male, right? So I do that obviously as a Latina, right? I do that to advocate for women and to outline those differences. So I would just say that's one thing. I've been out there as well advocating and helping people understand the wage gap and the impact of the wage gap on women and women starting firms. Mm-hmm. So it's not a secret that women or are paid less, right? Call it 20, 30, 40 cents less than their male peers. But what people don't understand is what is that impact? And that impact after 20 years of getting underpaid means that women 20 years into their careers or 25 years into their careers have a different net worth than their male colleagues. So the compounding effect of getting underpaid 20 to 40 cents on the dollar means that, and everybody knows on this call, the impact of the compounding effect means that women have less net worth, especially at that point in time when they can start their own funds. So it doesn't mean that women are not willing to take the risk to start their own funds. It's just that they're in a different financial position. So that's another area where, for anyone listening in, it's just really important to understand how impactful that is, because if you had more women starting funds, it can really change the landscape. and they will hire more women, they will hire more people of color, right? They will just have a different way of managing assets. And that's a tremendous opportunity that I, and for anyone who will listen will know that I'm always advocating for more women of all colors.
Absolutely. Mina, let's go back, and I don't want you to divulge all of the secrets of your study that you're about to release, but
Yeah.
go back and let's talk a little bit about some of the empiricals associated with women funds, right? I mean, we're not going to quote you on any of this, and you don't
Okay.
have to get it exactly right. But just in general, where are women really gaining traction in the industry? And where are they frankly being systematically, left out?
Systematically, I'll start with the latter. Women just raise and are not raising as big as a funds as they could or should.
So
And
smaller fund size, problem one.
smaller fund size, and it
Yep.
has nothing to do with their experience,
Yep.
has nothing to do with their capabilities, has nothing to do with their track record. It has nothing to do. I think there's just innate bias against women funds, right? And so that is a problem, but it's also an opportunity. I do see you do see women over-index in strategies like venture, right? Again, where it's okay for them to raise a $50 or $75 million fund. Where I see a lot of opportunity, and we've backed women is actually in the real asset space. So again, think about renewables, the digital economy, and the circular economy as well. And it's because women just really understand how to do more with less, and it's as simple as that, right? They're always scrappy, under resourced. And if you think about what solving our energy problem and in the going through the energy transition is, just you need people who have a different mindset. And so that I find, and I'm so encouraged by women who are really leading the charge there. And I just really hope that we can raise more assets. And frankly, you would see more programs around emerging that includes the real assets. So these women get that opportunity to raise bigger funds and do what they do well.
So Mina, give us some names, right? Let's name some women-led funds, and if you don't mind talking a little bit about their firms, you can include your own for sure. But I
Right.
know that you are in this marketplace. I know it's
Yeah.
not a challenge for you to do it. Give us some names, Mina.
Yeah. Patty Melcher, EIB.
Yep.
Patty has been one of the strongest performers in the energy space. She has invested in methane capture. She's invested in how to reduce carbon emissions at the wellhead. She has been doing this for a long time, and it took her a long time to raise her fund before we actually anchored her, and now she's doing phenomenally well. So fantastic woman. I mean, and such a great person as well. And she started a school, and she has an amazing story, right? I would say we've also recently have backed a woman. It's a woman and diverse firm called SCR, Sarah Graciano. They invest in the energy transition. We've done a number of co-investments with them in battery storage. Again, someone who is prepared, has come from the traditional energy sector and has raised a fund called SCR. You have people like Sarah Wright, who has Whole Street Energy. She came out of Constellation Energy, had a successful career there, has her own fund. And so these are three really good examples of women funds who are just making a big difference. And they each, have done their part, right, in changing the industry. And demonstrating with some of the businesses that they've backed or they've built that they can change the model. So those are three really good examples on the real assets who we want to, highlight. And I believe all of them should be or are NAIC members as well.
Awesome. Thank you for sharing
Yeah.
that. So you are, again, you know how I feel about you. I think you're an asset to this industry. You're a gem, and the opportunity to have this conversation. There ought to be many more Minas in this industry. But it comes about, and you've told me this, the impact of role models. You've had some really good mentors and role models. If you wouldn't mind sharing a few of them and what you learned from them, we'd be grateful.
Well, I'll start with, I'll actually start with Taurus Richardson, who I've known, as I think about, the three role models I would hit on. He's obviously been someone, I got to know him through Twigo. So it's another example of the Twigo family connecting people. Got to know him through NAA and NAIC, while I was in business school. And I mean, he's been a market leader in demonstrating that you can make money in the underserved markets, right? As you think about his initial funds. But I'd say that the most impressive thing about him is that he's a builder. He's a networker, and he puts himself aside for the greater good. And has stuck his neck out for others. So I would say that's something that, I aspire, and I hope to, continue to follow him in those footsteps. And he just stands up for what is right. And as I talked about my foundation, right, like, my mom's, sticking up for those, those patients who were not of the right color or not of the right, socioeconomic status, right? So he doing what is right. I couldn't have this conversation without mentioning my former boss, Kelly Williams, the head of CFIG, an amazing thought leader, incredibly smart, amazing with clients. She, clients trust her blindly in what she does, and has just been an amazing advocate for women, people of color. And truthfully, if you look at, the alumni that came out of CFIG, I mean, we're all everywhere and everyone's doing amazing things. And that speaks to her leadership, her mentorship, and I would argue her ability to pick talent, right? And picking talent who are not just really good at doing their job, but are just good people.
I know you're going to give us a third one, and I don't want to interrupt that, but it's interesting to me. Kelly and Taurus, both very smart people that don't waste a lot of time yelling and being loud and, just really trying to prove who they are. But both of them could easily be people who work behind the scenes, as much as they're obvious leaders. The whole industry knows both and they're leaders, but they both have worked behind the scenes through the fabric of the organizations, through their own firms, to really evoke change. So thank you absolutely for sharing those, and I'm interested in the third.
I would say my third one is really Sue Twigo, and really Sue and both Michael Oshowitz, who was the founder of SEO, right? I think both of them had the foresight to build those organizations, but I wouldn't be where I'm at without their mentorship, right? And Michael knew me, and when I was, 1997, when I was an SEO intern, and connected me with so many great people, people like Gilbert Garcia, right, and Eddie Ramos, all these people who are really, I consider them leaders today and just helped shape my career. And, Sue Twigo as well. I mean, she's like a fairy godmother. I always describe her. She has her whole Twigo family, and her and Nancy's work to support me throughout my career have been invaluable, because you can have those leaders, but you need those people who can connect you and continue to give you that encouragement, right? Because there can be a lot of doubt in your careers. It's not always a straight line. And both of them have offered that, obviously, in addition to Taurus and Kelly, but in a different way. And so in a way that they are, another family.
So as you get older, speaking about myself, one of the things you do is talk about the younger generation, right? And how they are and what they're about. You've named people that you've known since the earliest possible parts of your career, right? I mean, the folks from SEO would have touched you in the very beginning of your professional journey. Obviously, Taurus is somewhat of a peer, but a little bit ahead of you. And I would say Kelly got you from the midpoint of your career, and then obviously saw you through to making MD and getting to the senior ranks. What have you done that has caused these people to take an interest in you, also remain in your life? And clearly, I'll start you off. Clearly, you've been coachable, right? So talk a little bit about who you have had, not who you've had to be. Talk a little bit about how you have to be to attract mentors and give them the opportunity to shape you.
I think these are all great people who collect mentees. So I'll just start with that. There's an element of me, you can, yes, you can be special, but they are people who give, all those people give a lot. Mm-hmm. You have to be bold is maybe in terms of the question is really like advice, mm-hmm. is being bold, being prepared, being over prepared, and going the extra mile. But also understand that this isn't just about you. It's about how you're going to create more value for everyone else in your community. Mm-hmm. And I would say all of those people have seen or maybe observed that I'm about not just, of course, I would want them to help me in my own career, but I help people along the way and creating opportunities for others and not just myself. Mm-hmm. And being that person who's bold, who thinks out of the box, thinks creatively, right? Even my capstone project, right? Like that was just, no one told me, hey, Mina, this is a really good opportunity. I saw that, that was an opportunity for me to meet a lot of LPs and to advocate for women, emerging, diverse managers. And so being bold, thinking out of the box and just showing up. And I think that, especially in this remote environment and Zoom and so forth, some people think that they don't even need to really show up, right? And they can just dial in and not be as engaged. So showing up, being the first in the office, contributing, going the extra mile, really does differentiate you. But also not about just yourself, but what you're doing to make change for your industry.
That's outstanding. So I want to shift gears a little bit, Mina. And we didn't prepare this, and I know that you don't like surprises, but it's an easy surprise. I don't want to do it too. If you could change things in the industry, and I won't do the one thing because it's always hard to do, but if you could change parts of this industry, like just, with the wave of your pen, what would you change in this industry? What's patently unfair? What should be better? What are the insurmountable hurdles that people have to deal with in any aspect of it? What would you change about this industry if you could?
Well, what I'm going to comment is not changeable, but it just kind of speaks to it. I think what's hard is this is a people business.
Yep.
So I cannot change my name. I can't be, Joe Smith, right? And I do think that what's insurmountable is there is a lot of implicit bias in this industry. In this industry, as much as finance is supposed to be quantitative, there is so much qualitative, right? Yeah. And there's a trustee, Lacers, Nelson Serrano, who always says it's a different ruler to measure women and diverse managers, a different size ruler than it is for non-diverse managers. And that's just hard, right? You can't change that, and you can't change that there is that qualitative aspect. And I think that's that qualitative aspect that puts us as women and people of color, unfortunately, at a disadvantage. I would say if I had my magic wand, is again on my me advocating for women, and Kelly talks about this all the time, which is we as women do not have a leadership problem. We know how to lead. We know how to organize. We know how to coordinate.
Yeah.
We know how to get things done. Women have a followership problem. And not everybody follows the women and women leaders. And if I could change one thing, is that dynamic where we get more men to follow women.
Yeah.
And that would make a tremendous difference, right? Again, I'm just picking on my own data, right? If women funds, 70% of them, 70 are above the, first and second quartile, right? Imagine what would happen, right? If the industry had more women in their portfolios, total performance would go up in these plans or endowments or foundations, et cetera. So I think that would be the one other thing, that I would change, is getting more men and women to follow women.
So I too have studied at the University of Kelly Williams, and some work that Kelly and I did together was around policies in the workplace that, in a disparate way, impact women. And one of the things that came out of that work, and Kelly talked a lot about it, is a perception, maybe a reality, but a perception that oftentimes women aren't willing to take on the risks that some have taken on. And it's played out in this example, and we're talking stereotypically here, but a guy will have 75% of what he needs and will raise his hand and volunteer for the opportunity. And a woman will want to prepare more and be over prepared, right? Talk a little bit about if that's correct. And I know that we're talking in broad stereotypes here, but talk a little bit about that reality and the implications of that.
I see that happen all the time. I see that happen with women who don't think they're ready to raise a fund. I see that with women who don't want to advocate for themselves and getting a raise, or absolutely that happens. But that's why, again, that's the power of these networks, right? The power of NAIC, the power of having that village to encourage and support you and let you know, no, you're good enough, right? But also more importantly, like the more higher you go up, right? There's not a job posting for a partner role, right? There's not a job posting for an investment committee role. So it is making sure that you're just in those circles, you're well known, you're recognized, so that when those opportunities do come up, you become more top of mind, right? Than just like, who is that? Who is Jane? Who is Maria? Who is, whoever it is, right? So, yeah, I would say my only advice there for women is, you have to put in your time, you have to know what you're doing, but also advocate for yourself and try, because sometimes it opens other doors, right? And but you also don't want to have the other extreme. And I do see this a lot in the younger generation. It's like analysts who want to jump to managing director,
Right.
That also doesn't go, well either, but it's that right balance, and having people help you understand your value, your capabilities, your experience and track record, right? And helping you put that in context so you can go after those jobs that truly are attainable, even though you in your head may not think that is the case.
So, Mina, in the time we have left, I really want to accomplish a couple of things, and it's going to require us to transport to any community where I have you seated in front of an audience of young people, right? So that can be LA, where you're from. It can be entering class in Stanford. It could be someplace anywhere. But you're sitting talking to a group of people early enough in life that they can make real change, right? And you gave me a number of elements. We talked about hard work already, but what are some of the things you would tell young people that must be in their recipe for success? And maybe I'll cue you on the first one. It was really about sharing relationships.
Yeah, absolutely. And some people in this industry think that, giving up or introducing or some of your coveted relationships means that you're taking something away from yourself or potential self in the future. So the power of networking, the power of helping others, and understanding that this is about growing the pie, right? I think is so important. I think about the power of the ability to make change,
Mm-hmm.
and leadership does not come in a title.
Mm-hmm.
You can be a leader as a first year analyst in making change, and so not thinking that as you start a job or you're just an order taker, right? If you're in an order taker, job environment, maybe that's not the right place for you, right? But most kind of managers want people who can think,
Mm-hmm.
help optimize and improve. The other thing that I think about a lot and is, if you think about what happened in the 60s in the civil rights movement, right? How did the civil rights movement start? It started with 4 students in North Carolina who sat at the counter at Woolworth, right?
Mm-hmm.
The next day they showed up and stayed there again, and when they were not supposed to. Months later, you had it across the country. That was without the internet. That was without TikTok. That was before LinkedIn. And that power of communication and networking, right, is and so I think about that today and where we are. We have so many more resources, but sometimes I feel like we're actually less connected.
Right.
And if we did harness that, and you find other like-minded individuals and engage, with, again, or organizations like NAIC, we can accomplish so much more. And I think that's where our generation has failed, right? I mean, I think some of us have done our part, but we gotta leverage, multiply with the technology, the resources that we have to do so much more to advance. Because if I observe what's going on in this country, we're not taking 2 steps forward, we're taking 2 steps back.
Yeah.
And we need the youth, we need everybody, all across the value chain, right? And the food chain, to engage and do more.
So I want to ask you about 2 more, and I'm going to sort of juxtapose them because they're related. You said to me that you need to be prepared when your opportunity comes and take advantage. But you also said that you also need to understand that luck plays a role in your career. So let me give them both to you at the same time and let you sort them out for us.
It goes back to being the best at your job, working hard, showing up, going into the office, which I know a lot of people are resisting in the potential Zoom environment. It's engaging with your peers, your supervisors. So absolutely. But one thing I've observed is that sometimes you can be doing all of those things and either luck works for you and in your favor and luck doesn't work in your favor. So recognizing that you may not have that as successful, whatever you kind of in your mind think as that successful career 20, 30 years down the road, there's an element of you did your part, but there's an element of luck that it's just something that you can't control, but you need to be prepared as those opportunities do show up, that you're well positioned, right? And you're considered and you're in people's minds or thought of it for that job, for that board seat. for that role, for that opportunity.
That's awesome. Mina, you've been so generous with your time. We have covered a lot of ground. I'm grateful for your friendship, and I'm really grateful for the long experience of knowing you. I'm proud of watching your career grow, and I'm really excited about all the things that are yet to come for you. So thank you for being with us today.
Thank you. And again, thank you for everything you've done for my personal career, the NAIC has, and we all got to keep at it because it takes a village, and we need more people in this industry that look and think like us.
Outstanding. Thank you, Mina. Congratulations, and we'll see you soon.
All right. Thank you.
Yeah.
Have a good day.